All right, how's it going, everybody? My name is Antonio, and I had Gerald Paneton on the barbecue last Friday on November 17 to get an update on Gold Terra, which is an 18 million Canadian dollars gold exploration company that's got an option agreement with Newmont to find and define a 1.5 million ounce gold deposit close to the city of Yellowknife in the past-producing Yellowknife district of the Northwestern Territories of Canada. They recently reported a hole that they drilled to a total depth of 2,200 meters. So interesting to say the least, but they did confirm their initial thesis. So again, a unique situation and lots to talk about. So that's what we're doing here today. Who's not here with us today, though, is your financial advisor. This conversation is not going to include any recommendations to buy nor sell anything. Instead, it will be a casual talk between two people on the internet. And if your mom didn't tell you, you're not supposed to trust strangers on the internet. So for as far as you as a listener or viewer are concerned, this is going to be a conversation that's general and impersonal in nature. And it's definitely not a conversation that you want to use as independent research, because it's also going to include a lot of forward-looking statements about uncertain events that may or may not happen in the future. And also because Gold Terra pays for the production of these interviews, although they don't get access to the questions up front, and they also don't get any editing rights. Please do take the minute to pause the video and read the full warning that is on your screen right now, unless you like losing money, because the mineral exploration, development, and mining industry is among the highest risk industries out there, and you need to be diligent. You need to visit setterplus.com so that you can read this company's official filings and take your own decision in the end. That all said, I'm going to shut up and give the word to Gerald. All right, Gerald. It's been about a month since you and I spoke lastly, but you've had 3 news releases today since then, and it's a couple of assays there to talk about. So talk to me. What have you found?
Well, I think what we did, Antonio, when we had our first introduction and the 3 press release, we started this hole, the deep hole, our deep target at the Coal Mine. We call it deep, but in reality, it's not really deep. It's deeper than what has done before, and it's roughly 200 meters below the existing shaft, which goes down to 1,900 meters. So we're not very far from the Robertson shaft access. We're only 200 meters below. But what our target objective, to remind people, is that we've already outlined 542,000 ounces combined on the Campbell Shear, which is the prime target of our exploration program. So when you look at geology and you're familiar with, say, Archean geology, especially if you're looking at, for example, all of the deposits in Archean geology, they have great depth extension. They don't stop. They probably could go down to 5 kilometers. I'm not kidding. Seismic program that were done. There was those big seismic trends that were done across the Abitibi belt in Quebec, Ontario, said that those deep structure goes down to 10 kilometers minimum. They're very, very, very big. They're very strong. So when you look at it from a geophysical perspective, from a geological perspective, they are big systems that go deep. Now, we don't go to 10 kilometers mining if you can do it at surface, but that's the depth range that you can see in those operations. And when Miramar shut down the mine in 2003, and I've talked with numerous people, I believe this deposit is open at depth. And everybody that I talked to, whether it was previous senior management or previous actually beat geologists on the ground, the shaft person that I'm still in contact with, that used to basically maintain and not operate the shaft, but maintain the shaft on the ground, were telling me we left the mine with 650,000 ounces left, plus we never explored below the mine. We never explored below the mine. That was confirmed to me verbally by people who used to work there until the mine shut down in 2003. So it just everybody confirmed my hypothesis or my plan of reaching out. After we outlined 540,000 ounces, where's my million ounces I'm missing to put the mine back in production? The threshold to put a mine in production in all categories is somewhere over 2 million ounces, okay? And we have a good 500,000 ounces. Where's the next 1.5? And the target was very obvious for me to go deep below the mine. So in the last 3 press release we finished the whole mid-October We had to say we hit the Campbell shear.
Okay.
And while we're waiting for the assays, which came this week, it is 100% technical success. Is it 100% economical success? Yes and no. 13 gram over 1.7 meters is great, but not wide enough. But great is great, okay? But I would like to have 3 to 5 meters width, not just 1.7. Because if you mine 3 meters, your 12 gram becomes 6 gram because you dilute by 50%. But a shear zone, like the Campbell shear zone, or any shear zone in Archean geology, will pinch and swell. And because the grade is carried by the quartz vein, the quartz vein are not like a panel. The shear zone is a panel, but the quartz vein within it will enlarge and pinch, enlarge and pinch, enlarge and pinch. I've seen it like 100 times. It's typical Archean geology.
There's two things that I want to talk about here that I think sort of need more explanation, because you say it's not deep in the way you're explaining it, the way you understand it. I see that it makes sense to you. But the first thing I see when I open up, like if I meet your company for the first time and I look at it, it's 2,200 meters deep. That's the first thing you see. Oftentimes, that's a point where people just stop and they're like, okay, I'm not going to look into it. Why shouldn't they stop? Like, why do you think it's not that deep? Again, you gave me an example of a mine. Talk to me more about that. Talk to me how this could work, it being that deep.
Well, I would have never drilled this hole. And I appreciate your reaction. Actually, I love those reactions. First of all, if you look at page 15 on our website, which shows a section of our target and the drill hole we just finished, you can see there's a Robertson shaft that goes down to 1,900 meters. If this shaft was not there, I wouldn't drill the 2,000 meter hole. A shaft like this, first of all, costs close to $150 million Canadian, if not more. It's existing. It's an existing infrastructure that can be reused. The mine can be dewatered because it's currently flooded. But the shaft itself takes 3 years to complete. It's a 3 years job to do a shaft like this at a cost of $150 million in today's world. But when you look at the position of the shaft and my target, I'm only 400 meters from the shaft and 200 meters below the shaft. I don't need to sink the shaft deeper. I can just continue the ramp that Miramar started in early 2000 to access ore below the shaft. And you don't change anything. You just reestablish, you dewater, of course, there's a lot. But don't forget, I also have 500,000 ounces near surface. And I agree with you. Your reaction is perfect. This is exactly. Why would I go after somebody who is drilling a hole at 2,000 meters when I can invest in junior company in Africa that scrape the surface? But, you know, I work in Africa for many, many years when I was at Barrick. And it's not that I don't like Africa, but I just leave Africa to Africa.
Okay.
I live in Canada and I explore in Canada or in the US. I spend my career, traveling the world, going in many different places in the world. So I can talk to you about maybe 300 gold deposits around the world. If you want to talk about gold deposit, either I've been there or I've looked at it from a paper point of view, because in my years, working internationally with Barrick, when I left Barrick in January 2006, I decided to focus in Canada and the US. I built the largest gold deposit in Canada, Detour. And so what do you do next? That was 10 years ago when I left at the end of 2013. So almost, 10 years. I worked in California for a couple of years in 2016, 17. And I came back in 2019 for the Yellowknife camp. And why is that? Because of the grade. The grade is very attractive. They mine 14 million ounces at between 15 to 22 grams. This deposit can be valued at 500,000 ounces every 100 meters vertical. If you look at the kilometer strike length of that deposit, It's 1 kilometer strike length. They mined 5 million ounces over roughly 900 meters vertical. What does it mean? It means that there's 1 million ounces every 200 meters vertical. So my deposit below the shaft, which is open, say, from 2,000 to 2,500 meters, has the potential of 2 to 3 million ounces. That's the reason why we're there.
Right. And I'm thinking, so you're explaining this to me. We're having a lengthy conversation, an in-depth conversation. How do you explain that to the market in a news release or in a headline so that the market starts caring? Because that's what counts for people who hold your stock. That's what it comes down to, right? They want to see the stock pop on the news. You say we've got high grade, we've intercepted this Campbell shear, which can host that many million of ounces. Sure. But I also want to see the stock move. And the stock didn't move off that news.
No, but have you seen any stock moving recently in the last 6 months?
So that would be your snow lines or the people who hit it very big.
Don't even go and compare me with Snowline or a story like this. I mean, it's pointless.
Sure. I'm just thinking about
you can't compare. There's say about 5 hot story in Canada, in the US. Okay. And I cannot compare myself with this. I can only talk about my project and the value of it.
Yeah.
My job is not to compare myself. And if you go in depth and look at the current market, nobody is buying. Nothing. Except maybe 5 stories. Okay. The junior market is currently discounted 90% to the value of what they have in the ground. Whatever project you have across Canada, US. So, the way to look at our project is not comparable with too many stories in Canada. Why is that? Because we're a high-grade story. High-grade story like this is usually smaller, but it's very profitable. These assets can make a lot more money than the volume you need to do an open pit, especially in Canada. And how many high-grade asset discovery there is in Canada? Then that's how maybe you can compare them. But at the same time, you have to look at the valuation. What's the valuation of a high-grade story in Canada? And what's the valuation of Gold Terra valuation? We're currently valued roughly at $6 US an ounce for 1.8 million ounces. Look, if I want to purchase the Crown mine, and I believe that there's 2 million ounces below the mine, this is how you should value the news release. And your point about telling all of this in the press release, if I had, and you can go back on slide 14 in our presentation deck, last stope mine above the hole we just drilled, 534 grams over 20 meters. That's a headline, eh? I'm not talking silver, talking gold. A GT of over 10,000. We will break the record in Canada, like Bruce Jack did before. But Bruce Jack is not a story anymore because Bruce Jack is an operating mine. So why is Bruce Jack an operating mine? Because less capital, it's high grade, it's less risk, lesser footprint for the environmental. My old career looking at project from high grade to low grade, there's 2 things that are very, very important when you look at project. Infrastructures. I walked on Sukhoi log. Do you know Sukhoi log in Russia?
Yeah.
I looked at it. I worked on it for 6 months back in 1998. I still have the memory. I can show you a sample from my rock collection. 50 million ounces of gold at 2 grams. Is it in production? Why is it not in production yet? That's for 25 years ago. There was 30 million ounces. Is it because of Polyus? Or why is that? Infrastructure. And the way Russian geological survey put reserve in picture, it's pretty good.
Right.
They do more work than we do.
Right.
So listen, we want to talk about comparing project. I can challenge a lot of projects. I won't do it. I use an example actually, which is out of our sphere. to show you that the biggest advantage of Yellowknife and being in town is infrastructure and power. We have that. When I drill near surface, my cost is $200 Canadian per meter, all in. Drilling costs, supervision by our team, assays. Use this. So, yes, of course, my deep hole is more than $200 per meters. It's probably somewhere between 400 to 500 because it's deeper, which means it's going to be costlier to operate at depth. There's no question. But, I am working in Yellowknife, and I believe I can find 2 million ounces at 15 gram plus. So that's what I'm doing. And what that press release did this week or over the last month, because we had a few press releases, is showing you the core of the whole Campbell shear, knowing exactly where the gold was because we saw visible gold, and demonstrated with the assays that we had 13 grams over 1.7 meters in a very anomalous zone, grading 100 ppb to 200 ppb. So the gold is there. We've proved our point. The Campbell shear is open at depth. Just need more drilling.
Right. And
that story is just amazing for that.
Right. And so it's I guess it's important to understand that this is what the news release was about, is that proving that, okay, the Campbell shear continues at depth. That's been your target for the last couple of months. That's what you've achieved. That's what you're talking about, 100% success rate in exploration. At what stage do you believe the market sees more value in this? And what do you think you need to report? Like, do you think you need to report wider intercepts? Do you think it takes up until the PFS or up until you get the 100% ownership of the project? When does the market give you more value? Does that depend on you, or does it depend on the market?
I think it depends on both, in my mind. It depends on the work I was able to demonstrate the value at depth. So more drilling. Okay. In this current market, I'm advancing like a turtle. I built Detour in 6 years, from IPO to gold pour, in a very beautiful window. Best gold window in my career. I could not have changed. I could have not chosen to start Detour in a better timing than I did. And when I started Detour, gold was $450, summer 2006. When I signed the deal, when I inked the deal in August 2006, with a closing on January 31st, 2007, gold was $450. When I did the IPO, gold was $650. Within 4 years, gold was $1,900. Think about that. Like, I was with the market that was going up. The gold is like this. So if your listener look at gold, is great. It's $1,980 this morning, $1,983. But why is the producer discounted 20%? The producer currently producing gold are discounted to the gold price. There's two things that drives, the interpretation of that stats. Is that gold is not going over 2,000, right? And I was actually presenting in New York yesterday in front of gold buggers, like guys that believe in gold very much. There was a number of very good people there. And the fund that was presenting, where I was a guest, was talking about April, May, gold is $2,500 an ounce next year. That's an interpretation. I don't predict gold price. I adapt to markets. And if my share price was not discounted 90% to the value it should be, I would be raising better money, easier money, and I'll have, instead of one rig, I'll have 2 rigs to do my task of drilling deep holes. But currently, if I don't want to dilute too much my shareholders, I have to go very slowly, right? And if the market changed 6 months from now or 12 months from now, at least I would not have stopped working. I would have kept the project moving, and also I'll be successful with time. We look at the statistic of 611 holes below 1,500 meters vertical to 1,900 meters vertical. Okay, so a sandwich of 400 meters, a box, 400 meters vertical, over kilometers, 611 holes that tested the Campbell shear. For a GT of over 100, okay, only 8% of the hole got that. 8%. So when you look at the histogram distribution of all the GT of 600 hole, above 100 GT, which is 20 gram over 5 meters, there was only 8%. So gold is gold. When you have visible gold, you don't necessarily have the best assays all the time because it's in quartz veining, it's free milling below in that depth, so it's not refractory like the upper mine was. It's a great target for that. And I wouldn't, to go back to your question again, no, I wouldn't. I know it's 2,000 meters, but at the same time, I wouldn't drill there. But I have the advantage of being in a town of 20,000 people, having 60 megawatt of power. I have a lot of people supporting or reopening the mine if we find enough. And we've got tons of exploration to be done to the north along a structure. And think about it. The Campbell Shear was mined over maybe 4 or 5 kilometers, and they mined 14 million ounces. The property covers 70 kilometers of the Campbell Shear. Mm. So I can make discovery near surface with time.
Okay. When is that time? That's when the market works with the... What about in between? What are you doing over the next couple of... I know you're drilling more over the next couple of months. What exactly are you drilling? What are you looking for?
Well, on our property, we're looking to continue. We have a deal for 4 years to option and purchase the Con mine. And if we are able to demonstrate that we have more than 2 million ounces, plus the 650,000 ounces at 12 grams left in the mine, we will have a 2.5+ million ounces project on its own. Then we have what we call the mass, the threshold to justify raising money to build a mill. And then start the mine again. And then when you look at our property, which is now 920 kilometers, and I have to also to maybe your listener don't know about our lithium potential. So I want to talk about that as well, because we do have an amazing lithium potential in Yellowknife, and we're like within 50 kilometers out of town. So for some people who know lift, we probably don't have what lift have, but maybe we have something better, or at least equivalent to lift. So when you look at the gold potential of the property, you look at Miss Pickle, for example, we drill in winter 2022. I would love to go back next winter and drill it, but can I afford to do it? No, I can't. I have to go on my best target. My best target may be at 2,000 meters, but it's a real target. Miss Pickle, it's one quartz vein, 2 meters wide, 32 grams over 3 meters, right at surface. 100 meters from surface. We drilled that 2 years ago, and we don't have the money to go back. So if in one of your auditor is a rich uncle, that's what I'm missing these days. I put of my own money $1.5 million Canadian. I have my limits too, like everybody else. I cannot just, I'm not going to mortgage my house for that. And, you have to be smart with things, but you have to also be realistic.
Right. That's right. Are you, yeah, go ahead.
The potential of the Yellowknife camp, and that is the reason why I'm involved in this. With the experience I have, I can choose and pick where I want to work. And I went into Yellowknife because of grade, because you're in town, and because you're in Canada. And also because the Con mine, with a surface lease, will allow me to go and re-permit the project faster. If your listener knows the detour story, how can a guy go out, IPO 07, gold pour 6 years later, 30 million ounces and 26 months of construction because of the surface lease. I purchased the surface lease from Goldcorp. I deal with Pelangio. That was my first thing I did. Even before closing the deal, I was talking with Ian Telfer in September 06.
Right.
So we do things because we believe in doing things and for a reason. And I believe in Yellowknife. That's why I put my own money. We're advancing at a slow pace because of the current market, but at least we're advancing and putting the money in the ground.
Yeah. How wide of an no, let me put it differently. Are you working with 100-meter spacing? What kind of spacing are you working from here on for the next exploration program?
We're currently wedging approximately 50 to 100 meters next to the hit we just had. So basically, when you have a master hole, you can draw a radius of 100 meters, not below, but so laterally you go 50 to 100 meters on each side of the hole, and then you move up dip. And next year, the next master hole that we intend to do, subject to financing, will go probably 400 meters or maybe even 500 meters below the mine. We'll hit the hole, and then we'll wedge off from it and have maybe 12 to 16 cuts at 50 meters spacing roughly. That will give us a resource. And ideally is 2 master. Okay. 2 more masters. So ideally the project should, it's 1 kilometer strike length by 500 meters vertical. So we did the first master. We're doing our best to do as many holes. The next master will be there, and the next master will be there. And then you just try to fill about 30 to 50 intercept of the Campbell shear to demonstrate the 2 million ounces. That program in all costs about $10 million. Okay. And depending if you have 1 rig or 2 rigs, it's 1 year or 2 years.
What are you thinking, 1 or 2?
Now, in the current market?
A half.
2 years. I mean, think about it. You want me to raise $10 million at 10 cents?
Depends on how are you raising. But as you said, you need a rich uncle. You need a rich uncle.
Yeah, exactly.
Well, what about the potential of, you know, some of the famous deals that I've seen is like you're working on this with Newmont, but bringing in like a second major like your Agnicos or whoever might be willing to put money in that part.
I prefer not to talk about that because I have had entertained a lot of discussion with different people, and there's no question that people are looking, and you know, hopefully if somebody did very interesting, they could come and help. But I'm not going to joint venture the project.
Okay.
To another one. So they have to come as an investor in Gold Terra.
You have 2 years actually from this month. You have 2 years left, I believe, on the option, right? To define 1.5 million ounces.
Yeah.
Right. Okay. And that's, I mean, there's no.
That's 5. I don't need to find 5.
Okay.
I mean
1.5.
Yeah.
1.5. But so you think that's enough? I mean, you think that the next 24 months is when it happens?
I will be, because of the current market, I am in the process to renegotiate an extension, adding 2 years to the deal.
Okay. Well, that would help in terms of dilution, I suppose, as well. Yeah.
Not necessarily dilution. I don't need. I mean, you know, I can spend $5 million next year, $5 million in 2025, and by the end of 2025, when the deal comes up, I can say there's no 2 million ounces there. Keep your mine.
Right.
I will never put the mine on the shoulder of our shareholders with the liability and everything else if I don't find at least 2 million ounces.
Okay. At least 2, because it's 1.5 in your.
Yeah, but you don't want to find 1.5.
Okay.
It's like, I don't want to use the 600,000 ounces left in the mine. See, okay. I want to have a solid project. So my target is 2 million ounces outside of that. And so, you know, 1.5 in all category, I don't want to be skimmy. You know, I don't want to come up and I have 1.45, you know?
Right.
So my target is over 2. So when you drill for a big target. And if you get this big target and you add the 600,000 ounces left in the mine, you add value to your company without having spending the money on it.
Mm-hmm.
I think it's the right approach. I mean, be conservative.
That's right. That's right.
The bigger and the more solid project I have, the easier it will be to raise the money.
Yeah,
and there's value. There's a lot of value on this project. This mine has a water treatment plant, has a shaft that goes down to 1,900 meters. The collar is already done. I'm not sure what the cost is to do a collar now, but the collar of a shaft, which is a big concrete segment that could be 10-meter thick by, to encompass all the structure and solidify. We call it the collar of a shaft. Costs a fortune. I cannot put a price on it, but it's in the millions of dollars. It's still there.
Right. Looking at the exactly where you'll be drilling, to sort of go back to that, you said 50 to 100 meter spacing, and that is moving
50
west
to 100.
Yeah, 50 to 100. Yeah, exactly. I'm sorry, and that's moving west from the Robertson shaft.
Moving north and south of the shaft, and then moving up from the current master.
Right. Okay.
We'll try to. I mean, it's hard to see on our presentation, but I'll do something to show where the next wedges are and things like that. But we're currently doing the wedge. The wedge number 1 is ongoing now.
Mm-hmm.
So we should be able to complete the setup of the wedge within a week, and then we'll be drilling at 30 meters, and we should be back in the zone in 20 days. So hopefully before the end of the year, we'll have another cut.
Okay, another news release before the end of the year.
Yeah.
Okay, that's good. That's good. That's good enough. It's a calm period right now, so if anything, the market might even get softer, if that's even possible in terms of volume, because there's nobody on the exchange now to begin with, but we'll see how that goes. Yeah, I don't think I have any other questions. It's clear. You have a clear path in front of you. Anything else that you came here hoping to talk about but I'm failing to bring up?
I would like to attract attention that in 2023, we signed a deal. We got approached by a lot of different companies for the lithium potential of our property. As you know, we have a large land package that covered the Campbell Shear for more than 70 kilometers of strike length. In the northern part of the property and to the east of the property, we had a lot of pegmatite-bearing spodumene, LCT, that carry lithium. And instead of changing my gold hat and adding another hat, which is lithium hat, or rare earth and lithium hat, I decided to option the property or the rights only for rare earths and lithium. We had 3 different bodies that wanted to get our land. And the guys have been working. They spent close to about more than $300,000 this summer prospecting the lithium. And they had some good finding. But I want you to understand that we can still keep 20% of the project. They have to spend $10 million to get to 80%. We are being carried all the way to positive bankable feasibility study or until construction decision. It's a very good deal for us. Plus, we keep a royalty, a gross royalty of 1.5%. So we're there to create value for our shareholder by any means, without risking your money in lithium, which I know lithium from the periodic table, but I'm not a lithium person. I'm a gold guy.
Right.
And thank you very much for the interview, Antonio. And I hope to be able to talk to you soon again.
Pleasure has been all mine. Thank you so much for sitting down with me.